Brad Thomas here with Forbes Real Estate Investor. I'm here at ReCon 2015, joined by Bobby Taubman. Bobby's the CEO of Taubman Centers. Bobby, good to see you today.
Good to see you, Brad. Thanks for being here at the ICSC with us.
You bet. You bet. Bobby, let's dive into this. There's a bargain in the luxury mall space today. Taubman, considered a luxury mall player in the mall outlet space, trading at a discount, in my opinion. Let's start a little bit about the broader macro retail market today. How are you seeing your tenant space today, and how is your company performing on a macro level?
Well, there's no question that retailers are now trending back up. There was a period about a year and a half when really across the industry sales were flat.
Right.
But I think as you look at ourselves as well as our peer group, we're all now trending up in terms of our overall sales. You're seeing very positive spreads on leases opening, leases closing. You're seeing very positive spreads in terms of average rents, especially in the higher quality assets known as the Class A malls. We're very proud of our growth in the first quarter. In 2014, we had a very solid year as well. And we think there's a very strong future. We love our assets. We have the highest sales productivity in the space, over $800 a square foot. We think about half, if not a little more than half, of our assets are actually in the top 50 of all the assets in America. So we have great assets. We have a good history, great balance sheet, and we agree with you. We think it's a bargain in the regional mall space.
Absolutely. Full disclosure, I'm an investor in Taubman today, and it was great to have a special dividend as it relates to the recycling of the portfolio. Let's talk about your growth. How are you going to, now you've sold off these assets, these B assets we'll call them, how are you growing these A quality assets today, internationally, or where are you seeing the growth?
Well, we're seeing them in the core, obviously, with these great high productivity assets with very strong core growth in terms of just the NOI comping each year, the net operating income comping each year. On the external growth side, we are growing both here as well as in Asia. Here more recently, we opened Sarasota, a big project anchored by Dillard's, Macy's, and Saks Fifth Avenue. We also opened in San Juan more recently with Nordstrom's and Saks. We have under construction in Hawaii with Saks, right on Kalikau Boulevard, a wonderful project that is really on the 50-yard line of what's known as the fifth best shopping street in North America. And then in Asia, we're growing as well. We have 3 projects under construction. Taken together, our share, we still have about $1 billion of development, plus we have almost $300 million worth of renovations and redevelopments that we're working on with very good returns. So we have very solid core growth. We have very good external growth. We're adding about 4 million square feet in total in these 4 projects, the 3 in Asia and then Hawaii, in addition to what we already opened with Sarasota, Hawaii,
Sure.
Sarasota and San Juan.
Great. And in terms of growth, one thing obviously we look for investing in any REIT is dividend growth. I know Taubman just came out with a fairly recent dividend increase. How sustainable, Bobby, is that dividend for Taubman? I know you've sustained it through multiple recessions. You've never cut a dividend. Only mall REIT that has actually has that record. But how do you sustain that dividend going forward?
Well, I think we're very proud of that history that you've just quoted. We've been in business. We've been as a public company now for 22, almost 23 years. We've never cut our dividend. We've increased it 18 times. The growth over that 23-year period has been about 4.5%. In the last decade, it's been over 7%. In the first quarter, we increased it 4.6%. So there's a very continuous improvement over long periods, over long years. We have a great balance sheet. Many people call our balance sheet a fortress balance sheet. We are engaged in a big share repurchase program. We announced an expansion of it recently, so now total of $450 million that we're working towards. And we're very excited about being able to buy our own assets at the share price that we're looking at today.
Great. I just want to end and really thank you for this interview, and also just a special tribute to your dad, who just passed away. Founder of the company, and congratulations on continuing that brand, Taubman brand, moving forward.
Well,
best of luck.
Thank you. My dad founded this company 65 years ago, and he's very much considered sort of the father of the modern regional shopping center today. And he really imbued in this company really a sense of trying to make things better, not just different. And it is that founder It's just in the culture, it's in the DNA of our company. So we really focus on making things better. Thank you for being here today,
You bet.
Greg.
Thank you. Bye-bye.
Thank you. Bye-bye.